Good evening, I'm Nima Rajan, and this is Forum Daily for Thursday, April 7th. We start the cast with today's federal budget announcement. The focus of the Trudeau government's second pandemic budget is on making life more affordable for Canadians. Finance Minister Chrystia Freeland's spending plan features multiple NDP priorities, such as dental care, building more homes, green jobs, and a tax on excess bank profits. That should help the Liberals easily pass this budget, given their new deal with the New Democrats. Federal spending falls to $452 billion in the new fiscal year, with a deficit of $52 billion. Turning to the UN General Assembly now, which has voted to suspend Russia from the World Organization's leading human rights body. This is over allegations of horrific rights violations by Russian soldiers in Ukraine. Russia is the second country to have its membership rights stripped at the Human Rights Council after Libya in 2011. Thursday's vote was 93-24, with 58 abstentions. Meanwhile, Ukraine's foreign minister told a NATO meeting that his agenda is very simple. Dmytro Kuleba wants NATO to provide more weapons to help prevent further alleged atrocities. He says the more weapons his country gets and the sooner they arrive in Ukraine, the more human lives will be saved. All of this comes as G7 foreign ministers, including Canada's Mélanie Joly, are sending out warnings to Russia. They say they will keep ramping up sanctions until its troops leave Ukraine, and those responsible for alleged war crimes are prosecuted. They announced they are taking further steps to expedite plans to reduce their reliance on Russian energy. They will work together to that end. The ministers insisted that all those responsible, including any attacks targeting civilians and destruction of civilian infrastructure, will be held accountable and prosecuted. This was following allegations this week of war crimes in Bucha and other parts of Ukraine. The Russian invasion of Ukraine is also having serious impacts on rising food prices, and the UN Children's Agency is warning that this is increasing the risk of malnutrition of millions of children in the Middle East and North Africa. UNICEF added today that families are struggling to put food on the table during the Muslim holy month of Ramadan. Ukraine and Russia account for a third of global wheat and barley exports, which countries in the Middle East rely on to feed millions of people with subsidized bread and bargain noodles. They are also top exporters of other grains and sunflower seed oil for cooking. All right, moving to Britain now, which plans to build 8 new nuclear reactors and expand production of wind energy. This as it seeks to reduce dependence on oil and natural gas from Russia and other foreign suppliers following the invasion of Ukraine. Prime Minister Boris Johnson announced the plans on Thursday as part of a new energy security strategy. The government wants to almost triple nuclear power generation capacity by 2050. High energy prices are fueling a cost of living crisis in Britain, where household gas and electricity prices jumped 54% this month. Some big news in the United States. The Senate has confirmed Ketanji Brown Jackson to the Supreme Court. This shatters a historic barrier by securing her place as the first female black justice. Senate Majority Leader Chuck Schumer praised her selection before the vote, saying this is an inspiring day for everyone. Ketanji Brown Jackson will be the third black justice after Thurgood Marshall and Clarence Thomas, as well as the 6th woman. Back here at home, Canadians are taking on more personal responsibility for COVID-19 and are relying on rapid antigen tests to let them know if they might be infected. But experts warn that rapid test results should be read with caution. This is because of limitations on diagnostic accuracy and precision. Dr. Christopher Labos is a Montreal cardiologist with a degree in epidemiology. He says it takes more than one rapid test to rule out infection because of high rates of false negatives. He says potential sources of error include improper technique and testing too early in the illness for viral levels to be detectable. Meanwhile, a recall has been expanded to Canada involving some Kinder brand chocolate products linked to an outbreak of salmonella in several European countries. The Canadian Food Inspection Agency says the recalled products include Kinder Mini Eggs, Kinder Surprise Miraculous, and Kinder Egg Hunt Kits. The products distributed by Ferrero Canada were sold nationally with best before dates ranging from June 19th to November 29th. The CFIA says there have been no related illnesses reported here. Canadian photographer Amber Bracken has won the prestigious World Press Photo Award. This for a haunting image of red dresses hung on crosses along a roadside with a rainbow in the background. The crosses were put up to honor children who died at the Kamloops Residential School in BC. More on the 2022 budget coming up next with Elliot Hughes from Summa Strategies. Stay with us. We'll be right back. The Trudeau government's second pandemic budget is on making life more affordable for Canadians. Finance Minister Chrystia Freeland's spending plan features multiple NDP priorities, such as dental care, building more homes, green jobs, and a tax on excess bank profits. That should help the Liberals easily pass this budget, even given their new deal with the New Democrats. Federal spending falls to $452 billion in the new fiscal year, with a deficit of $52 billion. Well, with us to discuss the budget is Elliot Hughes, Senior Advisor at Summa Strategies. Sir, welcome back to Forum Daily.
Thanks for having me.
So what would you say are the main points in today's budget announcement?
Yeah, you touched on this. So housing is the big piece. This government wants to be seen as addressing the challenges associated with housing. So you've got tax relief, you've got money for municipalities to buy new housing, and you've got money for affordable housing as well. The other big piece was to show and to demonstrate that they're a good partner to the NDP in this new agreement they have. They've invested a significant amount of money, $5 billion and change, into dental care. That's going to make the NDP very happy and make it very difficult for them to oppose this budget. And then the final piece that I was most particularly interested in light of the current events happening around the world and Ukraine and so on, is investment in the military. We see $8 billion primarily for NORAD modernization, so continental defense, but there's also money in there to get arms directly into the hands of Ukrainians, which is something that the minister and the defense minister have spoken about.
All right, Mr. Hughes, let's zoom in on these spending promises now. I want to start with housing affordability in particular. Tell us a little bit more about the promises around housing affordability in Canada.
Well, the government knows that this is an issue that is becoming much more prevalent across the country and impacting a lot more people. And they knew that they had to do something about housing. They see themselves as being able to have affect and help on the supply side of this. So they're going to provide municipalities with, I believe, up to $4 billion. The numbers are flying around right now, just in the minutes afterwards, but I believe $4 billion to municipalities, which will help flow that money a lot quicker and to hopefully lead to houses being built. We have a supply problem in this country when it comes to housing. So that's one area. The other piece is directly going into helping people's pockets when it comes to housing. So they're going to increase the home buyers tax credit, and they're going to give some money specifically for renovations to your house. Those things are going to be able to be felt at the ground level on the individuals themselves, and that's something that I think this government wants to be shown. They understand this is a problem, and they want to be seen as doing something about it and helping people directly.
All right, sir. And what about military expenditure? That's been a major topic with the invasion of Ukraine. We're also seeing NATO pressure on Canada for that. So what changes to the defense budget are we seeing?
The government has said they're going to set aside or add $8 billion to the current defense plans, which is called Strong, Secure, Engage, which might sound like a lot of money. But when you think that Germany invested 100 billion euros over a couple of years, $8 billion doesn't seem like all that much. I wonder how our allies are going to, frankly, how are they going to see that? We want to be seen as a key member of NATO and a key member of NORAD, obviously with the United States. But if that's the case, we're probably going to have to make some more significant investments. Now, the other piece that they announced today in the budget was a review of the defense default policy, which I just mentioned. Now, that's interesting because that potentially opens up areas for using some money on projects that perhaps were not going anywhere to reallocate that to areas that might be a little bit more pertinent in today's day and age. The policy was written 4 or 5 years ago. The world has changed considerably in that time. And so I hope to see that to happen very quickly and for them to be able to deploy that money just as quickly.
All right, sir, just about a minute left here, but NDP spending pledges, how did the budget address those in particular?
Again, the Liberal NDP supply and confidence agreement that was struck a couple of weeks ago that would see the NDP support the government. Part of that, there are some things in there like dental care. Dental care, I think, was near the top of the list. Today, the government made a big time down payment on that. 5.2 billion over 5 years, and then close to $2 billion ongoing. It's going to be very hard, I think, for the NDP to criticize the government on this budget. They're going to get a lot of what they want in dental care, and then there's some other pieces around housing that the government is doing, as well as raising taxes in some areas and addressing some tax loopholes. So overall, I think the NDP is going to be quite pleased. I think they're going to have to walk that tightrope so that those hardcore NDP voters don't get too comfortable with the idea that the NDP are supporting the government too much.
All right, Mr. Hughes, thanks for that insight into today's budget announcement.
Thank you for having me.
Thank you. Coming up after the break, we take a look at the world of investments and the recent rise of stock splits among large companies. We'll have an interview with Brendan Caldwell, director of Caldwell Securities, up next. Stay tuned. A recent rise in stock splits among large companies has some investors fired up. Although the splitting of a stock has no impact on corporate size or profitability, it allows investors to buy and sell shares more easily. Just last month, Amazon said its stock would undergo a 20-to-1 split on June 6th. And Tesla is also making a similar decision. Joining us now to give us the latest updates and advice on investing in stock splits is Brendan Caldwell, director of Caldwell Securities Limited. Brendan, welcome back to Forum Daily.
Thank you, Nima. It's been too long.
Too long indeed. Definitely, Brendan. So for those who are not familiar, can you go over what exactly a stock split is and why companies decide to split their stocks in the first place?
All right. Well, just first things first. A stock is or share is a ownership in the company. You have the ability to participate in the company's earnings and dividends to the extent that you own a share or multiple shares in a company. Doing a stock split just means that if you had one share before the split, you'll have 2 or 3 or 5 or 10 shares post-split. And at least in theory, the shares would be worth whatever fraction of the pre-split value they were. So as you said at the introduction, it doesn't actually increase the value of the company, it just increases the number of shares. And your one share, as I say, becomes 2 or 10, depending on the number of shares that are split into. I think you used the example of Amazon, one share is being split into 20. There are reasons for that, but we can get into that.
So what about reverse splits, Brendan? We know General Electric did that last year. What happens to the stock in that case, and why do they reverse in the first place?
Well, they do a reverse split. That is where you have, let's say you have 10 shares and they make it 1. Or I think in General Electric's case, if you had 8 shares, they make that just 1 share. So in theory, the stock is supposed to go up. So if a share is worth $1, if you do an 8-for-1 split, it now should be worth $8 if all other things are equal, because you had 1 share worth, or you had 8 shares worth $1 a piece. Now you have 1 share worth $8 a piece. At least that's the theory. In the case of General Electric, if I'm not wrong, I think stock's down nearly 20% since last year, though. So why is that? Well, it might be one of 2 things. One, companies that are doing share consolidations or reverse splits, however you want to phrase it, probably aren't doing that well, because if a stock is going up and up and up and up, you'd be more like Amazon and Tesla. You'd be looking at splitting them into multiple shares. But if the stock's doing poorly, it's going down and down and down. The reason you do it is twofold. Stocks to be eligible for margin, that is for people to borrow against their shares, need to be at a certain price. Also, particularly in the US, to be eligible for listing on certain exchanges, you need to be the stock needs to be above a certain price. So there are fewer people that'll buy a stock that's not marginable, and it will cost more for them to buy it if it's not marginable. So that's one reason to do it. And there's a risk of being delisted if your shares price falls below a different level. Again, mostly a US thing for the latter point. But I think as we're seeing with the General Electric example, if you see a share consolidation, it psychologically does something to, and the shares tend to revert to their old price. Now, I don't know that GE is going to fall by, 8-1 or 1-8, but as we can see, it's down something like 20% since they did the split last year.
All right, Brendan, a minute and a half left here, but in terms of timing, is there an ideal time for investors to purchase a stock, maybe pre-split or following this stock split?
Well, in as much as share consolidations, I don't say they make the stock go down, but they're indicative of issues at the company. And there's the psychological aspect where the share price just tends to gravitate lower. So too, when when a company's doing a stock split, like a Tesla or an Amazon, companies that are very strong, then you're more likely to see those stocks continue to do well. Does it matter that much if you purchase the stock pre-split or post? Probably not. But I think my inclination, if you're wanting to buy the stock anyway for reasonable fundamental or technical reasons, pre-split is probably best, because there is this tendency for the stock to gravitate back to the price that it was before, this time on the upside rather than the downside. So if you had to pick, I would suggest buying pre-split.
Always an informative interview, Brendan. Thank you again for joining us today on Forum Daily.
Thank you, Nima.
Stay with us. When we come back after the break, Forum Daily's market update is up next. Catherine Murray joins us for her look on what has been happening in the markets. Catherine is the host of The Buck Stops Here, and she joins us to provide her insight and analysis into some of the biggest moves and developments from the past week. So stay tuned. Forum Daily will be right back shortly. Forum Daily's market update with Catherine Murray up next. Catherine is the host of The Buck Stops Here, and she joins us now. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, markets are once again very volatile. We had a nice rally on Monday, followed by essentially 3 days of selling pressure, with the Dow down by about 200 points right now, on track for 3 straight days of losses. WTI is higher after pulling back yesterday, currently trading about $97. We have seen oil pull back this week on an increased inventory build and also demand concerns stemming from slower global growth, and also as IEA members released 60 million barrels. We, of course, have also heard from President Zelensky calling for a total ban on Russian oil imports. Perhaps that's why we're seeing a little bit of stability today. Canadian dollar is trading lower versus the US dollar. And stepping back, the market sell-off really driven by investors interpreting the latest FOMC minutes released yesterday at 2 o'clock, which had a more hawkish tilt to it than perhaps the market was pricing in, specifically looking for a $95 billion monthly balance sheet runoff and the possibility for 50 basis point increase at each meeting. And also perhaps concerns that they have not ruled out, the Fed has not ruled out asset sales of mortgage-backed securities. And that was probably the surprise that caused yields to go higher and the market to sell off yesterday. Interestingly, as the US looks to tighten their monetary policy, we've got the Bank of Japan defending their loose monetary policy, and also the potential that China might actually have a near-term rate cut, just given the fact that their economic data as of late has been on the weaker side. So to recap, the bearish narrative in the market does center on the tightening of monetary policies in the United States and also likely Canada to follow next week, recession concerns stemming from inflation and the oil price shock, and also, of course, the potential that the U.S. Federal Reserve might make a policy mistake. The BOC, one could also worry, could do the exact same thing. The Ukrainian-Russia war, of course, is weighing on political tensions and growth issues around the world via the sanctions that are put in place. Also, of course, COVID shutdowns in China weighing on investor mindset. And from a near-term perspective, very importantly here, quarterly earnings results, which will be kicking off next week with the U.S. big banks. And there is, of course, a concern that company managements, given the price pressures, cost inflation, and the slowing growth that we perhaps are seeing, and we'll hear from these company managements whether or not that's true, that they will in fact be lowering their outlook for 2022. All of that taken together is why we're seeing these markets in a volatile session and volatile trading days. So expect perhaps more to come until we really get into the full swing of the market and quarterly releases. TSX has been trading lower as well after finishing lower yesterday alongside that U.S. sell-off. Today, of course, front and center is Canadian Finance Minister Freeland delivering the 2022 federal budget at 4 o'clock. Some of the more recent data does show some nice economic strength here in Canada, but of course, we do have decade-high inflation to combat, And the focus appears more to be on climate change, as well as housing affordability and defense. We'll see what they have to say about the inflation concerns and the growth outlook here in Canada. Watch for that. Also, of course, Canadian jobs will be reported this week. Tomorrow, it's the end of the week already, hard to believe, but we are expecting to see some gains following a monster jobs report last month. In terms of interesting headlines on the stock front and corporate headlines, Twitter traded up by 27% on Monday. That's following an SEC filing that Elon Musk has taken a 9.2% passive stake in the company. This comes after Musk tweeted asking whether the platform adheres to free speech principles and that he's been considering launching a new social media platform. We've also heard, according to the FT, that Facebook has plans to introduce virtual coins, tokens, and lending services to its apps. Apparently, internally, these coins are referred to as Zuck Bucks. We've also heard Warren Buffett has disclosed a $4.2 billion stake in HP. And away from that, I would just point out that many of the stocks that are associated with discount shopping have done very well, outperforming the broader market. Costco, for one, had very strong same-store sales this week. As it relates to the Canadian markets, we have seen quite a bit of weakness in tech, Shopify, as well as Lightspeed down by about 6 to 7%. Utilities are the areas that have shown some significant strength as of late. We did have an upgrade of Superior Plus at National Bank. And away from that, Roots, also some very good results there. Nima, I'll leave it there. A lot going on. Stay tuned, and I'll leave it back to you.
Thanks for that, Catherine. Take care, Canada. See you next time.